All right, let's just jump right in. We're seeing something pretty wild happening right now. Gold is absolutely blasting through new all-time highs. Silver is in price discovery mode for the first time in, over a decade? And now, even platinum is jumping into the mix. Now, the thing is, these three metals, they really don't usually move together like this. So, what's going on? Is this just some massive once-in-a-generation coincidence, or has something fundamental just snapped in how the world values hard assets?
So that's it. That is the central mystery we are going to unpack in this explainer. Because, look, when you see powerful breakouts that's synchronized across different assets, it is almost never an accident. It's usually a huge signal that something much, much bigger is happening just beneath the surface of the markets. The last time we saw a move kind of like this was way back in the 1970s. And that marked a massive shift in how the entire world thought about tangible stuff versus paper currency.
And this slide really gets to the heart of why this whole thing is so strange. We've got three totally different metals, and each one has a very different day job. Gold, all right, that's the world's ultimate safe haven asset. Silver is a critical tech metal. And platinum, that's an industrial workhorse, especially for the auto industry. They each have their own lane, so to speak. So when all three suddenly decide to floor it at the same time, it tells you something really significant is afoot. Let's break down each one and figure this out.
Okay, first up, gold. And the story here isn't what you might think. This isn't about your average investor piling in. No, this is much bigger. This is about entire nations fundamentally reevaluating the global financial system. And the main driver is a concept that's gone from a dusty economic textbook to our front-page reality.
And that concept is called fiscal dominance. So what is it? Put simply, it's the point of no return where a government's debt gets so massive that its central bank isn't really independent anymore. It can't just raise interest rates to fight inflation, because it's now forced to keep rates low enough so that the government itself doesn't go broke just making its debt payments. And when that happens, the value of your savings, your purchasing power, it starts getting quietly vaporized.
So, you might be thinking, okay, that sounds like a scary theory. Well, it's not a theory anymore. According to the Congressional Budget Office, for the first time in history, the annual interest payments on U.S. national debt are set to blow past $1 trillion in fiscal year 2025. This isn't some far-off projection, it's here. We are living it.
And this reality has backed the Federal Reserve into a corner. I mean, think about this. The interest on the debt is now larger than the entire U.S. military budget. So when the Fed started cutting rates last October, even with inflation still running hot, it made a lot of people scratch their heads. Normally, you'd never do that. But what's the alternative? To let those debt service costs spiral completely out of control? This right here is fiscal dominance in action. The Fed's hands are tied.
And you better believe, other countries are watching this unfold. This quote from Adam Glapinski, the governor of Poland's central bank, just perfectly nails the mood right now. Central banks all over the world are realizing that in this new era, they need an asset that can't be printed into oblivion by a policy decision. They need a true safe harbor. And they are putting their money where their mouth is. They're not just talking about it, they are buying. This chart is incredible. It shows that central banks have been hoarding gold at a truly historic pace, buying up way, way more than the 10-year average. What you're seeing is a massive structural rebalancing away from paper assets and towards a hard asset that no single government can inflate away. This creates what you could call a sovereign floor under the price of gold.
Okay, now let's pivot to our second metal, silver. Because silver's story is completely different. This has absolutely nothing to do with government debt. This is all about our transition to green energy, which has created this surprisingly fierce and maybe even unsustainable appetite for the metal. Now, you'd probably think that as technology gets better and more efficient, we figure out how to use less of a precious resource, right? Well, with solar panels, the exact opposite is happening. It's crazy. The new, more efficient solar technologies, like TOPCon and especially HJT, actually need more silver per watt than the old tech, sometimes up to 70% more. So the greener we get, the more silver we burn through.
And that incredible demand is slamming right into a major supply problem. This chart, it tells a pretty stark story. For 5 years running, the world has used way more silver than every single mine on the planet has been able to dig up. This isn't a fluke. It is a persistent structural deficit, and frankly, it's a huge potential bottleneck for the entire green energy revolution. And the scale of this shortfall is just staggering. Since 2021, the cumulative supply deficit is nearly 800 million ounces. So where's that silver coming from?
It's being pulled from above-ground inventories, vaults in places like London and Shanghai. But those stockpiles are now hitting multi-year lows. You can only drain the bathtub for so long before you're just left with an empty tub.
All right, on to our third and final case, platinum. Its rally has nothing to do with governments or green tech. No, this story starts with a simple corporate decision, probably made in a few procurement departments, that accidentally created an unstoppable demand shock that is now meeting a very, very fragile supply chain.
So here's what happened. For years, car companies used palladium in catalytic converters, but then palladium's price went absolutely parabolic, spiking to almost $3,000 an ounce back in 2022. So automakers did the logical thing. They switched to the cheaper, perfectly good alternative, platinum. They started designing palladium out of their cars and designing platinum in. It was just a smart, cost-saving move.
But, and this is the critical part, once an automaker retools a production line for a specific car model to use platinum, that demand becomes sticky. It gets locked in for that car's entire production life, which is usually around 7 years. So even though the prices have flipped again and platinum is now more expensive, it doesn't matter. That demand is not going anywhere anytime soon.
And this is where that corporate decision runs headfirst into geological reality. Take a look at this chart. It's a real eye-opener. A staggering 75% of the world's entire platinum resources are located in one single geological formation, South Africa's Bushveld Complex. That creates an unbelievable concentration risk in the supply chain.
And that aging giant, well, it simply can't keep up with all this new, sticky demand. South Africa's mines are incredibly deep. They're old. They've been mined for decades. All the easy-to-get ore is long gone. On top of that, production is constantly hit with power outages and labor problems. The reality is simple. Supply cannot just be ramped up to meet this new demand. A major supply deficit is essentially baked in.
So let's bring it all home. The answer to our initial mystery, why are all three of these metals rallying at the same time, is actually pretty clear. It's not one single story. It's three powerful, totally separate bull markets, all driven by completely different forces that just happen to ignite at the exact same time.
And here's the ultimate cheat sheet, the main takeaway. Gold is on the move because central banks are hedging against fiscal dominance. Silver is surging because the solar panel industry needs more of it, not less, as it gets better. And platinum is rallying because automakers have locked in demand that a fragile, concentrated supply chain just can't meet. Three different metals, three powerful, distinct stories.
And that leaves us with one last big question to think about. While each of these metals has its own unique driver, they all kind of point to the same larger theme. Whether it's sovereign debt, green energy, or industrial supply chains, we are starting to see the real-world consequences of hitting hard physical limits. And it really makes you wonder, in a world where paper currency can be created in infinite amounts, what's the true value of the things you just can't print?